Welcome everybody to our webinar, Preparing for COVID-19 Recovery, Loan Options and Forgiveness Strategies. Today is December 10th, 2020, and we are broadcasting live from our new office, 389 Interpace Parkway in Parsippany. And I just want to welcome you. It's a very clear but cold day, but great to be with you. Today's presentation is powered by Saks, SaksLLP.com, Saks Wealth Advisors, SaksWealth.com, and our technology partner, S2 Solutions. So hope that you're all doing well. And yes, this is the slide where we tell you that you need to understand this webinar presentation is for generic guidance only and does not constitute the provision of legal advice, tax advice, accounting services, investment advice, or professional consulting of any kind. So listen, folks, consult your professional advisor. You can always count on us for any specific questions that you may have, because we need all the facts to give you the right answer. And this is our lovely recovery task force. You can see we haven't changed much since the last webinar. Still wearing the same clothes. Todd, Josh, and Steve, and we're here to present the latest update on PPP. And also want you to meet the rest of our recovery task force. See all their beautiful faces, Angelo, Melissa, Amanda, Julia, and Matt. They're helping us with getting all these PPP applications in so you can be forgiven. They're part of our team. Today's agenda, of course, right now we're doing the introduction. My partner Steve is going to talk about the stimulus package, relief options, COVID emergency relief framework, the White House proposal, and the infamous tax deductions. Also, my partner Josh is going to talk about the Loan Necessity Questionnaire update, which I know some of you are still asking for, answers to that, and forgiveness application timing and form selection. Is it time to apply? Then Josh is going to talk about the financial statement considerations and Lending Institute update, and finally, some final thoughts. So with no further ado, I'm turning this over to my partner, Steve. Steve, stimulate us with the stimulus package.
All right. Thank you, Todd. I hope everyone's doing well this morning. As Todd suggested or indicated, I'm going to discuss the new stimulus packages that are out there. Nothing's been approved yet, but before we do that, just wanted to go through some of the many relief options that are currently available to businesses. You see here the PPP-1, which is the Paycheck Protection Program, which has kind of been the crux of the webinars we've been dealing with, so I'm sure many of you are familiar with that. The EIDL loan, that is still available through the end of this year and could be extended. The EIDL was a traditional loan program. Now the loans are up to $150,000 with a 30-year amortization period. Interest rates ranging from 2.75 to 3.75%, depending upon if you're a not-for-profit or profit business. Employee retention credit for those borrowers or for those companies who did not receive PPP loans, that's available. Payroll tax deferral, which allows you to defer your payroll taxes until 12/31/21 and 22. The Main Street Lending Program, also a traditional loan program that's out there. Then some additional relief programs that we've talked about as well. Hopefully a PPP-2 comes into effect, but also depending upon where you're located, there may be state or local grants and credit programs, as well as even rental assistance from landlords and whatnot. So a lot of different options out there, but I know people, as we talk about on the next slide, are really hoping that there'll be another round of stimulus. And as we've seen, there's been a lot of press about this lately, some of it surrounding the fact that the government essentially needs to pass a spending bill or they will shut down as of tomorrow, although our understanding is that they're going to or have passed at least a week stay on that. So they'll have another week till the 18th to get that passed. But we've seen a number of different stimulus packages out there. And here we mentioned HEROES 2 and HEALS 2. And even if you go back to May when HEROES 1 came out from the House. That was a $3.1 trillion package. They've since kind of skinnied that down, if you will, to $2.2 trillion. And the Senate has skinnied down their HEALS bill to between $500 and $6 billion in aid, but there've been a lot of sticking points. So the parties have not been able to come to an agreement. And as we've seen, unfortunately, the virus has spiked again, and people and businesses and whatnot are in need. So recently, we've seen a bipartisan group of senators called the Gang of Eight come together and put forth a $908 billion aid package, just the terms of which a little bit more detail was actually released just yesterday. So we're going to go through that. It's called the Bipartisan Emergency COVID Relief Act of 2020. Again, it hasn't passed yet, but there is, again, bipartisan support for this. And in response, the Trump administration, backed by Senate Majority Leader McConnell, as well as Treasury Secretary Steve Mnuchin, put forth a $916 billion package. So the numbers are close. Now, the issues are a little bit different, but we're going to go through first what's in the Gang of Eight $908 billion bill. And again, this has not passed, but it is exciting in the fact that there's a PPP2, something near and dear to my heart, the expense deductibility. As a tax professional, we've all been hoping that the expenses associated with the PPP spending would ultimately be deductible, as we believe that was congressional intent, despite the fact that the IRS has really doubled down on the position that these expenses are not deductible. We'll discuss that as well. And also loosened loan forgiveness restrictions. Right now, those are the current loan, the loosened restrictions are for loans of $50,000 or less. And Todd's going to discuss the different forms that you can use, but there is talk about increasing that to $150,000, which would significantly aid a certain number of borrowers. So in this Gang of Eight bill, we've seen the PPP2, the criteria being, I'm sorry, that says greater than 300 employees. I think that's a mistake. Actually, it should say less than 300 employees, so I'll correct that. A 30% revenue loss in any quarter in 2020, and expanded forgivable expenses. So more expenses would fall under eligible for forgiveness: supplier costs, investment in facility modifications, and PPE. It'll also help out smaller borrowers and underserved communities by allocating specific funds to them and increasing availability for certain charitable organizations as well. Unemployment assistance is in this bill. It would essentially expand the unemployment benefits through April or into April for $300 a week, and then extend the pandemic unemployment insurance programs that are set to expire at the end of the year. So other provisions and other big ones that have really been sticking points between the Democrats and the Republicans has been the state and local aid and the liability protection. And we're going to see when we go through the next bill that the White House put out, that state and local aid and liability protection is in there as well. CDFI and MDI. CDFI is Community Development Financial Institutions and Minority Depository Institutions, so giving them some aid. Transportation, which we know has obviously taken a hit due to the fact that most people aren't able to travel. And there's just a host of others: education, student loans, nutritional and agriculture, a number, as you can see here. But the one thing that is absent from this bill are the stimulus payments. We saw earlier in the year the $1,200 up to $2,400 of stimulus payments. Those are excluded from this bill. So something to keep in mind. Now, as I said just a couple of days ago, the White House issued a kind of a position on this as well, a $916 billion bill, which they'd look to fund $429 billion from Treasury and $140 billion of the unused PPP funds. So those haven't been allocated anywhere yet. And this also includes liability protection and aid for state and local governments. So that is helpful. And while, as I said, the Gang of Eight bill did not include stimulus, this bill actually does have a stimulus payment in there of $600 per qualifying adult and then $600 per child. And we see some other items in here, PPP2. They really haven't been a lot of details issued, but we're hoping that this does get passed prior to the close of the year in some form. I don't know what it will exactly look like. We've seen Senator Schumer and House Speaker Pelosi say that this $916 billion bill is a step in the right direction. So hopefully it'll bring them closer to the negotiating table and we can agree on something as we see that businesses are in need. But we see here that the expanded unemployment benefits, the $300 a week that was in the Gang of Eight bill is not here. So they're kind of bargaining with the stimulus payments versus the unemployment and seeing where that ultimately lands. Again, we don't know yet. So as of now, we're going to talk about tax expenses. As of now, the expenses are not deductible. There was a notice issued back in May that basically said these expenses would not be deductible. And as I showed you before, there is a bipartisan bill allowing for deduction of all these PPP related expenditures. So we're hoping that this does pass. But as I had indicated, the IRS doubled down on their position essentially last month when they issued this rev ruling and this revenue procedure, which basically says the revenue ruling indicates that if you have a reasonable expectation to anticipate PPP loan forgiveness and do not deduct expenses in year one and include loan forgiveness and income in year two. We had initially thought as these were loans as of year end, if you hadn't applied yet for forgiveness, that you would be able to deduct the expenses in the year you took out the loan. And then when you did receive forgiveness, if you did, in the following year, you'd include that income. Well, that's no longer the case. So basically you would not deduct the expenses in any year, even if the timing overlaps. Now you see here, it does say reasonable expectation, which is not specifically defined, but we're taking that to mean that if you plan to apply for forgiveness, then you should have a reasonable expectation that you will receive it. I know there's that Loan Necessity Questionnaire, which Josh will discuss for borrowers with loans of $2 million or more and how that impacts reasonableness, but that doesn't impact it here. So essentially, if you're going to be going for forgiveness, you really wouldn't be able to deduct the expenses. Now, there is a revenue procedure, 2020-50, that talks about how you can deduct expenses, but that's only if your loan forgiveness request is denied or you decide to withdraw the application for forgiveness. So there are opportunities if this does occur where you can either deduct the expenses in 2020, amend your 2020 return, or deduct them in 2021. So I think, and we're going to go through final thoughts, a little precursor as to what I'm going to say. I think I'm going to preach patience here, and I know the rules keep changing, but definitely something that we're going to be monitoring, and with the hope that these expenses ultimately will be deductible, which would make a lot of this moot. And with that, I'm going to turn it over to Josh to discuss the Loan Necessity Questionnaire.
Hey, thanks, Steve. Good morning, everybody. So a lot of questions, a lot of comments regarding the Loan Necessity Questionnaire. Just a reminder, there are two separate questionnaires. So if you're a for-profit entity, ultimately you would fill out Form 3509. And if you're a nonprofit entity, you would fill out Form 3510. We're going to talk about timing as to when these questionnaires are to be completed. And also remember too, these are only for loans in excess of $2 million. So, get back to what's the intent? Why are they doing this? So the intent was to gather data to support the good faith certification, going back to Section 1102 of the CARES Act. And basically what that said was the uncertainty of the current economic conditions makes necessary the loan request to support the ongoing operations of the eligible recipient. They did initially, when they put this questionnaire out, they did put it out for comment. The comment period closed November 25th, 2020. The AICPA and other, firms and organizations issued many comment letters to Congress. The overall theme, of those comments, at least the feedback that we've gotten, is that the due diligence is not necessary. For those of you who've gone through the questions, you might come to that same conclusion, that the current format, does not support that. There's also a suggestion out there regarding narrative approach where the borrowers provide support on why the loan was necessary at the time of request, right? If we go back to what the original intent was, it was to keep people employed. So if you kept people employed, Why is this necessary? So to this point, the SBA has not responded. So we're still anxiously awaiting the results of that. So a lot of questions also. When is it due? So the loan necessity questionnaire is not required to be submitted with your forgiveness application. Only at the time when the bank submits the application up to the SBA will then give the go-ahead to the bank to provide you with the questionnaire, at which point you have 10 business days to complete the questionnaire and send it back. So what are some best practices here? Again, the version which you may be looking at may not be the final version. However, whatever machination of it happens, I would envision that, these would be the questions that, somebody would ask. So certainly now we say start formulating your responses while the information is still fresh. For those of you who have gone through it and you've seen the financial questions that it's asking for second quarter numbers. However, you may decide that you'd like to present the second quarter by showing the individual months, right? So for a lot of us out there, April was terrible, May was terrible, maybe June started to rebound. So individually, by showing the financial for each month, it may actually better support, the reasoning behind the certification. And then another thing too that we are encouraging people to do is to look at the borrower list, which has been made public, and see if you have customers and/or suppliers who receive the PPP loans. Again, I think from our standpoint, that's the argument that further necessitates the need for why you took the money in the first place. So on December 1st, 2020, the SBA released the names, addresses, and loan amounts for each PPP and EIDL borrower. The link is below, so you can certainly click on that and it'll take you to the full list. And again, this release of data was expected. The president was certainly pushing for it, and so was the general public. So again, as we know, and we'll talk about later, there's so many eyes on these programs. There's been a lot of publicity out there, and like I said, we'll touch on that later. But again, don't panic. This at its core, this is just the SBA doing their due diligence with respect to the loans. But hey, maybe it's something that they do away with altogether. So we look forward to those comments, and we'll pass those on to everybody as soon as we hear them. So Todd, I'm going to pass it to you on forgiveness application time.
Thanks, Josh. So let's talk about the timing of forgiveness application. Little stats first. As of November 22nd, 2020, that was the latest information that we had. Lenders have submitted 595,000 loan forgiveness applications to the SBA, a total of 5.2 in PPP loans, which is about 11%. And the value of these submissions is approximately 83.2, and the total of the 525 billion in PPP funding of 15%. So that's kind of a stat right there. You need to know that the SBA has forgiven some of these. The total forgiveness decisions has been 367,000, and the total value of those SBA decisions 38.4 million. So the SBA has 90 days, as you know, to render its decision. This, by the way, information is courtesy of our wonderful AICPA. Thank you, AICPA. So let's talk about the application timing. Let's go over some things that we know. First, there's a 10-month post-covered period loan forgiveness application deadline. That's your deadline, folks. When your covered period is over, you have 10 months. So there isn't really a necessity to rush. Also understand that depending on when you receive the money, there's a 2-year versus a 5-year loan amortization. And if you did receive that money prior to the act that was, I believe, June 5th, you are under that 2-year period, but that act basically allowed you, if the bank agrees, to extend the loan amortization from 2 years to 5 years. And we're encouraging people to take a look at that, see what period you're under, because if for one reason or another you think you need to, you're not going to be able to spend all the money, or it's not going to all be forgiven, maybe you want that to be 5 years instead of 2 years, and you need to speak to your bank. Also, there's changing rules. Who knows what's going to come out next? IFRs, FAQs, possibly there's a change in control. There's financial statement implications to the question of why you should apply for forgiveness. There's the new stimulus package, the PPP 2.0, that may impact forgiveness of PPP 1. There's a potential increase to loan forgiveness thresholds. As you know, the threshold's currently $50,000. As Steve mentioned, there's a mention of it being increased to $150,000. And of course, the loan forgiveness questionnaire that Josh just spoke about for loans of $2 million or more. So there are other questions. How do borrowers document the FTE rehire exceptions? And how will the FTE rehire exceptions apply if a borrower is apply for forgiveness before the end of the period? How does the December 31st, 2020 deadline impact this? So these are all questions concerning timing of when you should apply. And just to put a final period on that, our answer is it depends. It depends on the answers to these questions as to when you should apply. We'll get into that a little bit more in our final thoughts section. The application form. So which application form should you select? Just so that you know, I'm pointing right now, virtually pointing my finger to the handout section. Can you see the handout section? All 3 forms are laid out there, as well as the loan forgiveness form decision. But just to recap, the form 3508EZ, this is for if a borrower is self-employed with no employees and did not include any salaries in the average monthly amount, or the borrower did not reduce annual salary or hourly wages of any employee, and you can see the asterisk set below, by more than 25% for the period compared to the period between January 1st, 2020 and March 31st, 2020, and the borrower did not reduce the number of employees or the average paid hours of employees between this period and the covered period. Or 3, the borrower did not reduce the annual salary or hourly wages of any employee by more than 25% for the period compared to the period of January 1st, 2020 and March 31st, 2020. And the borrower was unable to operate during the covered period at the same level of business activity as before February 15th, 2020, due to the compliance with COVID-19 requirements established or guidance issued between March 1st, 2020 and December 31st, 2020 by HHS, CDC, or OSHA. Wow, that was a lot to read. So if you can do the 3508EZ, that's great. It's going to be a lot less calculations, but you do need to meet one of those 3 requirements. So the other form is the form 3508S, and that's for loans of $50,000 or less, and also affiliate loans of $2 million or less. And you can see we have that in the handouts. That very well may have an increase in the threshold. And then the form 3508 is for all other borrowers. We would encourage you to go through the loan forgiveness form decision tree so you can pick the right form, because obviously if you want forgiveness, you got to start with the right form to apply. This is a little bit about the loan forgiveness tool, just to let you know, we are working with our clients, some of you on the call, to actually use this tool to manage your application in one place. It allows for forgiveness applications for multiple businesses. There's a bulk upload of information, directly input payroll values from authorized payroll reports. That's a new feature that actually has come out this week, where we could basically take the information directly from your payroll companies. It gives you a preview of the 3508 form before you sign it, so you can make sure that you agree with everything in it. Instant verification of payroll, utility, and bank account transaction data is available through secure integrations to trusted third-party and systems, and it creates a nifty zip file with all the information that can be sent to the bank. Now, note, caveat, the banks may want more information, they may want different information, but at least this tool that we're using for those of you who want us to do this for you or work alongside with you on it, will produce something that you can use to check to make sure the information is accurate. And just to clarify, this is a software that we are using, and you would be providing us the information. It's not made available to you. We are working with us, and we are using the software to produce this. But if you're interested, of course, you know where to go, to our website, and to reach out to us. And now for the long-awaited discussion, Josh, I'm turning this over to you to talk about financial statement considerations of all this lovely stuff. Josh, take it away.
All right, thanks, Todd. So a lot of questions coming in, especially as we get closer to year end, as to how the loan should be presented for financial statement presentation. There are two acceptable options, and we're going to go into what the two of them are. And regardless which option you pick, there must be clear and descriptive disclosures in the financial statements, including the policy selected and the related impacts. So the first one is accounted for as debt under Accounting Standards Codification ASC 470. So here's where it's treated as a traditional loan, whereas you would accrue the interest on the note, and it would remain a liability on your books until either the loan is in part or wholly forgiven and the debtor has been legally released. So for those of you who have received forgiveness, you've received a letter from the SBA saying that the loan has been satisfied and you've met the requirements. That's what we mean by legally released. Or if the debtor pays off the loan to the creditor. So maybe there's some of you out there who chose not to go forward with forgiveness and have the cash available to repay the loan, in which case the loan would no longer be on the books. Once that loan is in part or wholly forgiven and legal release is received, a non-governmental entity would reduce the liability and record a gain on extinguishment. So again, presentation in the financial statement, much like you'd see other income. And again, this is under ASC 470. The other standard is actually an international accounting standard, number 20, also found under Accounting Standards Codification 958. And what this says is that if an entity expects with some certainty to meet the criteria for loan forgiveness, the loan may be accounted for as a government grant with a condition, right? So if the money's been spent and we reasonably assume that the loan is going to be forgiven, even if forgiveness is not applied for until subsequent to year end, then it would allow for us to record it at revenue, as revenue in the year for which the money was spent. So how it works is, so a business entity would record the cash inflow from the PPP loan back in April or May as deferred, as deferred revenue, and then as the money was spent in accordance with the PPP program, then you would essentially reduce the liability and record the income at that time. So again, assuming that the loan was spent during calendar year 2020, under this standard, you would be entitled to recognize the revenue. So again, there's two options. There's certainly a lot to consider from a bank covenant standpoint, as well as to how you account for these things. So keep an eye out for that. Certainly consult us, consult your accountant as to the best presentation. So just a quick lending institution update. A lot of you, I'm sure, have received emails from your banks saying that their portals are open and ready for submission. Going back to what Todd said before regarding timing, I think the IRS ruling, good, bad, or indifferent, kind of fast forwarded the process for people to go ahead and start applying for forgiveness. Again, I think it's important to really understand from your bank as to whether or not they are accepting the SBA form or whether or not they have their own form. Some banks do, some banks don't, so that's important. Also, too, a lot of the banks have put out an information request list of documents which you will need to provide alongside the application. So again, the best time to start really gathering and the information is now. Another thing we've seen is that some of the banks are focusing first on some of the larger loans. So some banks have set a threshold of 50,000, some have set a threshold of 150, where loans above that amount they're starting to process first. Part of that certainly considers the automatic forgiveness for some of the smaller loans, which as of now is 50,000, which we hope will the bill will pass and that threshold will increase to 150,000. One of the other things that we're hearing is that there is a tremendous amount of fraud out there, and that's having an impact on the forgiveness process. We believe that a lot of banks will most likely wait until all of the year-end payroll tax returns, the 940s, the 941s have been posted to the IRS so that they are able to cross-reference the payroll information. So again, being that is the largest expense, and every day there's another article in the newspaper out there about someone applying or fraud being committed with the program, I think they're going to make sure that all the information is available before they sign off for final forgiveness. So understand that if you do have a large loan, and again, I can't quantify if that's $1 million or $2 million plus, but it is possible that if you do submit it now, then there may be some waiting on your end, that, like I said, until those reports are actually posted and they're able to verify that those reports are accurate and what were filed with the IRS. So we're staying in tune with it, certainly. Those are some of the big things that are coming out of the banks at this point. But if you do have a unique situation, we are learning it is certainly best to maybe reach out, speak to your banker prior to submitting the application, just so again, they understand your story a little bit when they sit down to review your application. And just some final thoughts. For me, we're starting to see a lot of applications. People are asking us to look at them. A lot of people, a lot of situations do qualify for the easy form. Todd had went through it before. So before you just default and go to fill out the big one, think and really think through whether or not you really fit for the easy form, because it will definitely save you time, although still, of course, produce all the reports that are necessary to support the numbers and the fact that you don't have the FTE reductions, because at some point the bank may ask for it, or on the odd chance that the SBA decides to audit it later, you have all that information readily available. But don't panic. Certainly, the bill that's out there in Congress should, hopefully do, right for everybody. Again, which was the intent of the program all along. So, Steve, I'm going to pass it to you. What's your final thought?
Thanks, Josh. Well put. I was just going to preach patience. I know this has been obviously a very difficult year for everybody, and at least strictly looking at PPP, everybody wants to kind of get this off their books, get this behind them so we could look into 2021. Well, as we've seen, the rules, they are changing. So really just work with your advisor, take a look at your individual situation, reach out to us, but definitely be patient. Some situations may call for immediate filing of the loan forgiveness. Some in situations it may wait. So you really want to think about this holistically and just give that some thought, especially to also considering any potential changes due to the election and the Senate runoff. So there's just a lot of moving parts here. So all items that we'll be considering and looking at this year and into next year. And I'm going to turn it over to Todd now. Todd?
Thanks, Steve. So, Steve, Josh, I think, Steve, you're preaching patience. I'm probably would add the word proactivity. Be proactive. This is the time really to do some very high level planning for 2021. I know, folks, that not everything is known. That's the best time to do planning is and have different scenarios that you set up. Please contact your professional advisor. Obviously, if we are them, then give us a call. And I would, as has been spoken already on this webinar, start getting the information together, even if you don't plan on applying for forgiveness anytime soon. It's not a bad idea to see where you stand and be able to take that into consideration. And those are my final thoughts. Guys, anything else before we wrap it up? Okay, with that being not hearing anything, just want to let you know that we will continue to have these webinars. Things are changing rapidly. Don't know if we'll have another one before the end of this year. Hopefully we will, but it's a to be decided in the future. And as far as our resources, please remember to email us at covid19@sacsllp.com and visit our resource center on sacsllp.com. If there's a question that we didn't answer today and you need some further clarification, reach out to us at that email address. Be happy to answer your questions. And again, stay safe, stay positive, and let's continue to work together. Have a great day.